Welcome to our 2023 State of the Cloud report. Pretty much the biggest day of the entire year. I think we would all agree. Thank you. Massive applause. This is a bit of an experiment. This is the first time that we've gathered members of our portfolio here together. It's like a good excuse to have you come and listen to, 30 minutes of VC hand waving, but then we promise we'll shut up and let you guys talk to each other and share some real tidbits of meaningful value. Fortunately, the camera is not going to follow the late comers today. So I'm Kent from our Boston office, and I'm just really excited to be here with all of you today. It's been a very weird year. That's probably how many of us are feeling. So this time a year ago, we gathered to review the state of the cloud, and it was a total mess. We were post what we've coined the SaaSacre. So the 2021 bubble valuations had crashed down to earth. We were seeing a ton of troubled financings, really challenging environment for startups, a lot of fear in the air. And the 12 months that have followed have contained a lot of the same. So we'll admit there are many days where we wake up, we read the headlines and we think, oh no, not again. This is a pretty gloomy time to be a SaaS company. Valuations remain at all-time lows. There are scary headlines every day. Crypto collapses. That didn't surprise all of us, but here we are. And then, of course, the recent collapse of Silicon Valley Bank, which surprised all of us. So in many ways, it's a gloomy time. And at the same time, 133 days ago, ChatGPT launched, and in our opinion, changed probably the world and certainly the world for SaaS applications in a major way. In many ways, we feel like we're living in the multiverse. Gloomy headlines every day, and yet, as we look at the current wave of large language model technology facing SaaS apps, we feel as optimistic as we've ever felt about the state of the cloud in 2023. The wave is coming fast. So we're going to get started. We'll spend 30 minutes today with members of the Bessemer team talking to you. We'll start with Janelle and Katie from our San Francisco office, who will take us through the current highs and lows of the macro economy. And then we'll transition to Talia from our San Francisco office and Mike and myself from the best office, Boston, obviously. Go Red Sox. To talk about the current AI wave and what that means for all of our SaaS founders here. Along the way, we'll have our 5 predictions for the year. So if you're a fan of listicles, feel free to count them down as they go. With that, I will transition to Janelle and Katie, who will take us through the current state of the macro climate.
Thank you, Ken. As Kent mentioned, it is no secret that cloud stocks took a drubbing last year. When we published our State of the Cloud report last April, the cloud markets were in the midst of a severe pullback event that we coined the SaaSacre. And I'm wearing all black today in memory of that event. And, since the start of 2022, the BVP Cloud Index is still down over 40%, which is a more marked decline compared to the broader market indices. A major reason for the pullback last year was due to the external shock of hiking interest rates. Within the year, we moved out of a hyper-low interest rate environment at record-breaking speed, and this led to multiple compression and a significant amount of macro uncertainty. Currently, the average forward trading multiple of the BVP Cloud Index has not just normalized, it's actually reset below the 10-year trailing average and also below the long-term pre-pandemic averages. And all of this macro instability didn't just impact multiples, it also impacted business fundamentals as cloud companies had to deal with a deluge of headwinds stemming from recessionary fears. So these were things like lengthening sales cycles, tighter customer budgets, and more scrutiny. So suffice to say, it was quite a gloomy year for the cloud. Taking a longer-term perspective, we'd like to emphasize that cloud markets have consistently outperformed the broader market, which is very much testament to the fact that the cloud model, with its strong net dollar retention, recurring revenue nature, and low marginal cost of distribution, is quite possibly, and we believe wholeheartedly in this, one of the best business models ever to be invented. And some fun facts to put all of this into context. Even in the last 12 months with, seemingly never-ending challenges, the average BVP cloud company still grew 2 times faster than the average S&P 500 company. And another really astounding fact is that in the most recent earnings quarter, 90% of BVP cloud companies outperformed Wall Street estimates versus 65% for the S&P 500. And so with such a sort of bleak macro backdrop in place, it came as no surprise that IPOs came to a screeching halt for the cloud. And this was quite a stark contrast to the IPO frenzy that we saw in 2021. And similarly, SaaS M&A slowed, but they remained slightly more robust for several reasons. One, it was a record-breaking year for private equity-sponsored deals, especially take-privates. And two, on the strategic M&A side, there were several blockbuster strategic acquisition announcements, including Adobe's announcement to acquire Figma for 50x current ARR. And that marks the highest acquisition multiple offered for any software company of scale. And that deal has yet to close, but what it represents is that best-in-class cloud companies can still command a valuation premium even in tough economic times. And I'll now hand it over to Katie to walk through what happened in the private markets.
Great. Thanks, Janelle, for that comprehensive overview of the public markets. So now turning to the private markets, as everyone in this room is probably a little too well aware, unfortunately, things didn't look too dissimilar on the private side. The pullback that Janelle just walked us through on the public side was also felt deeply on the private side. VC fundraising basically fell off a cliff last year compared to 2021 and returned to the weakest levels that we've seen since 2018. So some folks are pointing to the all-time high dry powder as a sign of potential recovery. For those who don't know, dry powder is a term that indicates dollars that have been raised by VCs but has yet to be deployed. However, we would caution that this may be a red herring. A lot of this capital is likely earmarked for existing portfolio companies rather than for net new investments. So that's to say that basically just because VCs raised a lot of money in recent years doesn't mean that it's a return to boom times anytime soon. So the question that's on every founder's mind likely, including many of those folks in this room, is when should I fundraise? We polled our 60-person investment team here at Bessemer and asked them this question. As you can see from their answers though, it's pretty much all over the map. Basically, it's really hard to time the fundraising markets. So instead, the advice that we're giving our founders in general is don't wait for the next bubble to fundraise. We're unlikely to see anything again like what we've seen in recent years. And as always, the best time to raise money is when you don't need the money and you can actually get money. Now that we've kind of walked through the public markets and we've talked about the private fundraising markets, let's check in on how private SaaS companies are faring. So at last year's State of the Cloud, we introduced the term Centaur. And for those of you who don't know, a Centaur is a private SaaS company that's at 100 million in ARR. And this is a pretty elite subset of companies. And at that level of revenue, these companies tend to endure. So keeping ourselves honest, we predicted last year, based on the first quarter's run rate, that there would be 70 new Centaurs born in 2022. We assumed that it would be the best year for Centaur growth based on how the year started. Unfortunately, though, the pullback that we saw in the public markets also hit Centaurs, and we believe that only approximately 50 new Centaurs were born rather than the 70 that we predicted. It was still the best year, as you can see from the graph, for Centaur births before any year prior to 2021. And we believe that this speaks to the robust nature of the cloud business model, even in more challenging times. I'll turn it back to Janelle to speak to how founders should think about the trade-off between efficiency and growth.
Thank you, Katie. So with the markets pulling back, cloud companies experience a paradigm shift from the age of access to the age of efficiency. And cloud leaders, especially many of you here, are now carefully weighing the trade-offs between growth and profitability in order to drive efficient growth for your companies. So let's put this into a heuristic map to public market sentiment. At the height of bull market exuberance, this was at the end of 2021, a 1% improvement in revenue growth had the same impact on valuations as a 6% improvement in free cash flow margin. So at the bull market exuberance, revenue growth was more important, at least for valuations, by a factor of 6 compared to profitability. Then as we know, the market turned quite abruptly. And at the end of last year, this ratio moved closer towards 1-to-1, and it sometimes even tipped slightly in favor of profitability. And today, with more macro stability, we're seeing this ratio stabilize closer to 2-to-1. So a 1% improvement in revenue growth has the same impact on valuations as a 2% improvement in free cash flow. So that's what's going on in the public markets. What about for private markets? And for that, we polled our BVP investor group to understand what should be the aspirational profile between growth and profitability that startups should aspire to. And as you can see from the results, there was a resounding top answer, and that was triple-digit growth, but with a 1.2x burn multiple in order to still hit the rule of 40. And so what that means is that startups don't need to solve for cash flow break even right away, since they should still be investing in growth, but this growth should be at optimal costs, not growth at all costs. The rising imperative of efficient growth brings us to our first prediction for 2023, where we anticipate a rise in adoption of SaaS solutions to help fight SaaS sprawl and SaaS inefficiency. There are many key areas that cloud leaders can leverage software to help them fight inefficiency and sort of cut access and improve profitability across different P&L line items. For instance, there are cloud FinOps tools that help with cloud cost management and utilization. There are SaaS procurement software that help with vendor rationalization. And there are also engineering productivity tools that improve developer workflows and also help to benchmark engineering OKRs and R&D cost allocation. And I'll hand it over to Katie to walk us through our second prediction.
So when we polled our investor base, one of the questions that we asked them this year was what areas of cloud software they're most excited about in terms of investment over the coming years. As you can see on this slide, the areas at the bottom, which represent the highest areas of excitement, are many of our classic Bessemer roadmaps, like vertical SaaS or supply chain software. A new area that saw a lot of excitement, though, was climate software. This brings us to our second prediction. Climate software drives the green energy transition. In 2022, the US passed one of the most comprehensive pieces of legislation to usher in the green economy. That was known as the Inflation Reduction Act and included a lot of funds and stimulus for initiatives and software and technology that could help in ushering in the green economy. This legislation, coupled with the falling price of renewables and rising consumer activism, has us optimistic about our green energy future. We believe that cloud software will be imperative in establishing the green economy and represents an exciting area of investment for the cloud in the years to come. So the bottom line is, after a bunch of this doom and gloom on the public market pullback and the tighter private fundraising markets, we actually believe that there's still many bright spots in the cloud investing ecosystem. That being said, though, we haven't even touched on the far and away number one area of excitement across the firm. And if you're on Twitter or LinkedIn or just not living under a rock, you won't be surprised to know it was far and away AI. So I'll now turn it over to my colleagues, Talia, Kent, and Mike to walk us through what's happening in the exciting world of AI and how Bessemer in our portfolio is embracing this wave of innovation.
Thanks, Katie. So now that we've eaten our spinach, we get to talk AI. We're amidst a transformative moment in technology. AI is advancing at an exponential rate, and performance is just blowing through traditional benchmarks. It is getting so good.
You probably couldn't even tell that was an AI of my voice, and not the IRL Talia.
Okay, Talia, you take it from here.
Thank you to my robot counterpart. I had fun playing around with the AI voice generators over the weekend, and they are getting pretty freaking good, as you can see. So you can have whole conversations with yourself kind of on autopilot, which is super freaky. But no, this is an unprecedented moment. And it seems like it happened all of a sudden, but it's the result of decades of progress that's been compounding and progress across a number of different technological vectors. GPUs are developing efficiency at a Moore's Law rate. The invention of the transformer in 2017 kind of marked the beginning of this new revolution in AI and large language models. And we have new model architectures that are a lot more efficient and able to train on more data. You've seen over the past year that, actually the past 133 days, that one company out of the gate has just garnered a ton of the attention and catapulted what has been decades and decades of hard work into what seems like the limelight overnight and public discourse, and that's OpenAI and ChatGPT. But despite what it seems like, it isn't just a David versus Goliath battle where there's just a few large centralized platforms that stand to capture all of the value and have the most deep pockets. You do have companies like OpenAI, like Anthropic, and like Google. We're also seeing the proverbial 1,000 flowers bloom and a lot of activity in the open source ecosystem, a lot of activity in new frameworks, vertical models, and a really robust long tail ecosystem that's emerging, which really benefits you, the builders. And most important, it's also becoming cheaper and cheaper to do this and to build this in-house. We estimate it would cost roughly $500,000 to train a GPT-3 quality model yourself today, which is down about an order of magnitude in just 2 years, and pretty impressive, and means that it's becoming a lot more accessible to builders. So we predict that there will be this kind of centralized head of a few bigger companies, but that the long tail is going to be extremely long and that a lot of flowers are going to bloom. There's already over 120,000 models on Hugging Face as of today. And so with all of this activity, with AI moving out of the research lab and into the industry and becoming a lot more accessible to builders, we're seeing a lot of activity and VC dollars are flowing into this space. New categories are emerging. There are companies that are full stack and are building proprietary AI models that feed into their products, like our portfolio company, DeepL. But there are others that are leveraging third-party foundation models and the robust developer ecosystem to build at the application layer or do a hybrid in between. There's entirely new categories that are emerging that just weren't possible even 2 years ago. And a great example is our portfolio company, Jasper. That's an AI copywriter that makes it 10x or 100x more efficient and faster for businesses to create really high quality marketing content. I think I saw here somewhere Rami from Even Up. You can just raise your hand. Awesome. So even vertical SaaS can be AI first. And Even Up is co-pilot for personal injury lawyers. And one of the products I use the most, Perplexity, is reinventing search and taking on Google with a whole new paradigm for information discovery. And of course, there's a bunch of applications and existing products like Intercom, like Zapier, like Shopify, like Canva that have already started to embed AI native features into their products. And we think pretty much every company should fall into this bucket very, very soon. As we look at this landscape, we've had a lot of debates internally. Okay, well, where does value accrue? Is most of the value going to be captured by the foundation models? Is it going to be at the application layer? Will NVIDIA just get all of the VC dollars, just go straight into NVIDIA so we should all buy their stock? A lot of different views. Our prediction is it's none of these. Our prediction is that the majority of the value is going to flow to the end users, and that AI is creating already massive consumer surplus. And this means that the value that it's creating is just far exceeding the price. And we're already seeing this happen where the cost of using AI and building on AI models is down 10x, but the performance is significantly improved. It's driving enormous productivity, but at a price that's essentially close to zero in a lot of cases. And companies are even embedding AI features, but aren't necessarily monetizing it. And so we think it's exciting because it's becoming really accessible, but it's also an imperative for founders to think about how do they not just embed AI as table stakes, but how do they build it into their products and build moats around that? So when we surveyed the Bessemer partners, there was not a single partner in our partnership that didn't have at least one portfolio company that was entirely focused on making AI the forefront of their product and their product experience. But we can't tell if that's good news or bad news because it's just one, at least one per partner. And so we think that means there's everyone else left in the room. And so I'm going to turn it over to Kent and to Mike, who are going to talk more tactics on what that means.
Awesome. Thank you, Talia. So as Talia said, many of our portfolio companies, including, frankly, many of you in this room right now, which is why we're so excited to have you here, have leaned forward and embraced the potential for this technology. But that means that most of our companies are actually still sitting on the sidelines. And maybe this isn't surprising. For a lot of you, especially those in this room, this wave of language model technology is coming straight for you in a way that may be somewhat obvious. No offense, Rami, but if you're building legal technology, you look around and what are your customers doing all day? They're dealing with human language. And so it's pretty obvious that wave is coming straight at you. Maybe less so if you're building accounting software or vertical SaaS for construction. Like, is AI really going to change that world? We'd caution you that this feeling, this status quo bias, is often what affects incumbents at the beginning of a huge technology wave. And our belief is that this wave is coming for all of us, whether or not you've seen it yet, and it's time to buckle up. The safest assumption is that this language model wave will massively disrupt the space that you are in. Leading to our fourth and easiest prediction of the day, which is that language model AI is going to affect every single category of SaaS. No one's safe. Okay, so it's time to get ready. A simple way to think about the magnitude of this change is to look at the history of human-computer interaction. So at the beginning, none of us were there, but you had to talk to computers through their language using punch cards. And when I was a little pup, the command line interface, does anyone know how to do yeah, there you go. We've all been there. In the 80s and 90s, thanks to Steve Jobs, Bill Gates, and others, we got some new tools. We got the mouse or the mice or the moose, whatever you say, but we got the mices and GUIs and Windows and easier ways to interact with computers that democratize access to these machines. But in a sense, for a couple decades, we've been playing a very sophisticated game of charades with computers. And 133 days ago, they started to speak our language in a sense. This human-computer interface shift, we think, is the final one, unless the computers learn to read our minds, which would be a little scary. But it's the final shift in human-computer interface, and we think obviously impacts everything. And of course, that's only a fraction of the capability that these language models portend. This is really exciting for many of us in this room, and probably also a little bit terrifying. And for good reason. There are some real issues to work out here. Leaving aside the existential concerns, which are obviously being discussed widely, there are issues with hallucinations, with IP, with regulatory issues, biases. These are real and need to be addressed in the coming days, weeks, and months, and we will all be working hard to do so. But we caution that even though your GC may be losing sleep and telling you to please stop, that this fear is always the first wave of a new technology adoption cycle like this. So I love this comic of the early days of electricity showing people getting caught in the electric lines. This is how we feel. And often the fear precedes the progress. And so it reinforces itself. And I would expect we'll see continued very scary headlines in the coming days. But we at Bessemer think there's only one choice as a responsible SaaS founder, which is to embrace this innovation and decide to be relevant on the other side of the wave. Because the potential of this technology is so incredible. This is probably not necessary for many of you in this room, but let's take a breath for a second and just think about what this technology could do for us. By now, you've probably figured out that these language models are not thinking, they're not hallucinating, they're just simply massive predictive calculators, but they're really, really good at taking a starting prompt and coming up with the next following set of response that most satisfies that starting prompt. Now, the initial demos of this were incredibly cool and jaw-dropping, but what did most of us do with GPT when we first used it? Who had it write a poem? Who made it write a poem is the first thing you had to do. Yeah. It really impressed our grandparents. It was really cool. You saw this computer writing a poem. But if you're not building a SaaS app for poets, maybe it wasn't obviously relevant to what you're doing. We at Bessemer think actually, although this generative AI is very cool, that it may not be the most powerful usage of this technology. That instead, slightly less sexy, but maybe more applicable to everybody in this room, is the ability of these language models to take a starting prompt and simply analyze that prompt, extract the intent, the meaning, translate it into some action, and then use that intended action to trigger a software action, maybe to fire an API command to a separate piece of software. But that ability to use this starting prompt as a control plane for software is incredibly exciting. And of course, even that example is very limited because it's sort of caged in this human language application. And of course, these language models don't just speak English or Japanese. They speak every language, including code, including the language of weblogs, sound waves, images. The possibilities here are truly limitless and completely blow our mind.
Well, that's easy for Kent to say that the technology is truly limitless because he doesn't actually have to build anything with these products.
I'm a VC. Yeah, I don't build anything.
But we recognize that for all of our cloud leaders out there, this movement can feel somewhat overwhelming. And to help you figure out where to get started, we've interviewed dozens of companies that have been integrating large language models into their products over the past year. And we've distilled their lessons learned down into this 4-step roadmap that we'll run through with you quickly. But at a high level, it starts with first, conducting an audit of your internal operations to identify opportunities where you can leverage AI internally. Second, reevaluating your product roadmap from the ground up. Third, actually starting to take action and ship AI-powered products. And finally, figuring out your long-term AI strategy. So let's dive in and get started with the internal audit. So every department within your organization has opportunities to be leveraging AI. And many of these internal use cases are probably your lowest hanging fruit in terms of potential efficiency gains, and they provide great opportunities for your employees to actually learn how to work with these technologies. As one example, after running an internal AI hackathon, our portfolio company Luxury Presence ended up identifying opportunities to use LLMs to power their website design service for real estate agents, and ended up reducing their content creation costs by 66%, which is also going to end up saving them millions of dollars over the course of the next year. The next step is to look at your product roadmap from the ground up, really taking a first principles perspective. Meaning, if you were to rebuild your product today with all of the AI capabilities that we have, how would you best solve your customers' pain points? And we recommend starting by looking in these three buckets. So first, look within your application for any language interfaces. Anywhere where your users are currently interacting with your product via text, these are great opportunities to supercharge those with AI. Next, look for predictable and repeatable sequences of workflows. After all, these technologies are fundamentally designed to predict the next step in a sequence. So anywhere where you have these highly predictable workflows, those are great opportunities for AI to help you consolidate manual work. And then finally, look for cross-product workflows. So think about this as, what do your users do immediately before or after interacting with your product that involves language? This could be anything from sending an email or generating a report or just pulling unstructured data from another system into your product. We believe that all of this should be in scope for your product roadmap. And particularly, we think that over time, a lot of these human workflows today that involve manipulating unstructured data and moving it from one system to another, these are going to become more and more automated via API and more consolidated. So just keep that in mind, particularly to make sure that your product ends up on the right side of this cross-product workflow consolidation trend. And as you think about rebuilding your product roadmap, we also want to call out a few complementary technologies that we think are going to be particularly impactful as extenders of language models for B2B SaaS use cases. And so the first is OpenAI's plugin ecosystem has created just this explosion of tools that are expanding and extending the power of language models beyond the interface of the chat. And we think Zapier is one great example, as you'll hear about a little bit later, with their Natural Language Actions API, which enables you to automate entire workflows across their network of 20,000 SaaS integrations entirely with language. Next, there are many use cases within B2B SaaS where customers really want a model that's going to provide a more factual and kind of specific response, often constrained to their own knowledge base. And in these cases, vector embeddings have really emerged as a powerful complement to language models, where you can be using embeddings to search through a customer's knowledge base for a very specific context, and then feed that information into the language model to power a system that's both conversational and factual. And this is very similar to the approach that our company Intercom has taken to power their new Fin chatbot service. And then finally, we're particularly interested in opportunities and technologies that are going to help particularly large enterprises leverage the power of large language models with their sensitive data without running into any data governance issues. And so we're seeing lots of companies exploring different approaches here, from self-hosting open source models to masking PII before sending any data to a third-party model service. And we continue to think there's going to be a ton of innovation here over the next year. And we're really excited about the potential that this is going to unlock within many large enterprises. So this brings us to step 3, which is really to get started. And so this is a list of all things you can be doing today to really get your team started, from establishing AI hackathons and setting up internal Skunkworks teams to lead these initiatives. But it really comes down to identifying what are the features on your roadmap that are most actionable, safe, and feasible to get started with, and then just starting to ship product. And we want to highlight here that at this phase, you shouldn't be over-optimizing for cost or long-term differentiation. And similarly, don't let it hold you back if you feel like you don't have internal expertise yet on model fine-tuning. We've seen lots of companies ship pretty impressive production-grade products with fairly basic approaches to fine-tuning or prompt engineering, and then ramp up their sophistication over time. Finally, your biggest advantage as a startup is speed and agility. And so we really encourage you to get started shipping product today, get it in the hands of your users, and then start iterating as you learn from them. So while we think in the near term speed is most important, over the long term, we expect that most of AI is going to end up looking more like enabling infrastructure that supercharges all software. And thus, defensibility is going to come back to really where it's always been, which is delivering great product and great user experiences for your customer, and figuring out efficient distribution. But we recognize that great products in this post-AI world are going to look a little different. And so we think there are some important nuances that we want to highlight. First, it'll be really important to seamlessly integrate AI into the natural workflows of your product. Just bolting on a chat interface or adding an assistant won't be enough. And we think examples like GitHub Copilot are great examples of what this can look like when it's done really well. Second, products are going to need to move closer to being outcomes machines, delivering outcomes for their customers versus just being a tool for their users. And we're already seeing this come true in the example of customer success platforms, where companies like Ada and Intercom have already moved from being primarily tools for customer success agents to now products that are automatically resolving many of their end customers' issues. Third, we think efficient distribution is still as critical as ever. All of our existing cloud go-to-market best practices, of course, still apply, but we also think there's going to be great opportunities for AI to help streamline and supercharge distribution as well. And just some examples would be AI helping to deliver a jaw-dropping customer experience that helps to spur more word-of-mouth referral and growth, or making it dramatically easier to onboard new customers and foster more product-led growth. And finally, we do want to acknowledge we think there will be some select companies, some of which you'll hear from today, that have the opportunity to build a really robust full-stack product and really defensible data moats based on their proprietary data and user feedback within the product. But to be honest, we think these will likely be limited to specific use cases and industries. And for the vast majority of SaaS companies, it's still a little too early for us to know whether everyone will be able to build really deep and defensible moats around their data, particularly given just how fast the general models are evolving and improving. And so we wanted this to be on everyone's radar, but also acknowledge that this may not be a really deep and defensible moat for all SaaS companies. And so to wrap it up, we want to just acknowledge that we're very much still in the early days of this entire movement. And given the rate of change, it's really hard to predict anything at the moment. But if there's one thing we're certain of, it's that everything is happening faster. AI is powering faster development cycles, more efficient sales and marketing operations, easier customer onboarding. And all of these efficiencies, paired with just mind-blowing customer experiences, are going to drive AI native companies that are capable of growing faster than anything we've ever seen before. And we at BVP are really excited to help usher in this next wave of industry-defining companies. And so with that, I'm going to turn it back to Ken to bring us home.
All right. So we'll bring the VC portion of this pageant to a close, summarizing the 5 predictions from our new multiverse. So Katie and Janelle started us off talking about the move towards efficiency in this current environment, with SaaS spending as a big villain fight against that efficiency. And so our recommendation to fight that SaaS spending is, of course, not surprisingly, more SaaS spending to fight the efficiency moment. We then talked about some bright spots in the cloud economy other than AI, climate software being one of them, but there are many others, as we still see meaningful exits and high-priced financings, but just reserved for the best of the best companies. We then transitioned to AI, where Talia took us through the current moment at the native AI portion of the ecosystem, the battle there where we decided that and predicted that the winners would be all of the rest of us building applications and as consumers of this technology. We then moved to our easiest prediction of the day, that this is a wave that's coming for all of us in a good way. It will impact every category of SaaS software, and we better embrace it now. And finally, Mike took us home with some practical advice for SaaS founders and his prediction that we'll see the best, fastest growing, most efficient companies in history founded in the coming years. So that's it for Bessemer's portion. In the coming weeks, you'll see some resources coming out from this team. You can email ai@bvp.com, where a human is on the other end ready to respond to you, probably a member of this team up here. And a quick thanks to this team for their hard work in the last few weeks getting ready for this presentation. I will note that we had Midjourney generate our AI avatars on this screen, and they gave me like 17 fingers, which my 3-year-old looked at and said, "Daddy, your hands are noodles." So we're still smarter than these machines in many ways, so we can have some confidence there. So with that, we really appreciate you all being here with us to support this moment. So thanks so much.